Our first topic is sole proprietorships and entrepreneurs. Sole proprietorships are the majority, believe it or not, of all business forms in the United States, and entrepreneurs essentially is anybody who starts a business. An entrepreneur forms and operates a new business by him or herself or with other people. You could have an individual that's an entrepreneur, you could have a company that's entrepreneurs, you could have a group of entrepreneurs, etc. Entrepreneurial forms of business, in other words, how you actually operate as a business, can include many different types of businesses. The first one we are going to discuss is the sole proprietorship. Then you have a general partnership, limited liability partnership, or the limited partnership, and a limited liability company. We're going to discuss each of these in turn, and we'll discuss the positives and the negatives. The one we're going to start with is the sole proprietorship. The sole proprietorship is simply where you open up and start operating. It's not the sort of thing that you need any formation in terms of forming a business. Now, if you have a store, or if you have even a lemonade stand, or pretty much anything you have, you may actually have to get government permission before you actually operate. In other words, if you want to open up a restaurant, you may need to get permission from the Board of Health, or you may need to get a license. If you start a real estate brokerage firm, you may need to be a licensed real estate broker. That's all completely apart from the issue of the business formation. But in terms of a business formation, a sole proprietorship does not require any actual formalities. You just open your doors and you start operating. You don't need to go to the government to get a license to operate a business. Again, depending on the type of business, you may need a license for that particular type of business, but in terms of the formation, in terms of your operating, how you're operating, a sole proprietorship simply means open your doors and start operating. If you have a garage sale, or if you have a lemonade stand, or if you, whatever you want to do, operating is simply a matter of advertising or going out and doing whatever you need to do. You are a sole proprietorship. If you make any money from royalties or from authorship or whatever, and you haven't formed any actual business formation, well, then you are a sole proprietorship. The business is not a legal entity, and that's the reason why it's the most common form of business organization in the United States, because many people that have very small businesses or only do a little bit of business, if you file an income tax return, this would be a Schedule C, where you report your self-employment income, and you may not even think of it necessarily as a business, but if you make money, congratulations, you are a sole proprietorship. I would venture to say that most people in their lives at one point or another are a sole proprietorship to at least one extent. So it's owned by a single person. Just open the doors and start operating. You can hire people. Just because you're a sole proprietorship doesn't mean you can't have anybody working for you. Many sole proprietorships do have people working for them. And for legal purposes, there really is no distinction between the individual and the business. As far as taxation goes, and as we go through the various types of business organizations, at each step we are going to look at the important things that distinguish this business type from other business types in terms of how they are taxed, in terms of how the owners are liable for various issues that come up, etc. Now, the taxation for a sole proprietorship is easy. All profits are considered personal income of the sole proprietor, and there's no separate entity of the business itself. That means, as I said before, when you file your income tax return, you file a Schedule C, which is self-employment income, and you report whatever income you made, or a loss. There are some limitations on losses, but generally speaking, if you lose money, you can take that as a deduction. So if you make a lemonade stand in your front lawn, and people come to you on hot summer days, and you give them ice, and you give them lemonade, maybe you give them some ices, whatever you give them, and they pay you a couple of dollars, well, at the end of the year, you've made $1,000 and you've had $400 in expenses, so you've made a profit of $600. Well, that goes on your Schedule C of your 1040, and you don't even have to report it as a separate entity. It doesn't have to file its own tax return. You may have to describe the business, and on your Form 1040, the IRS actually asks you to put it within one description. You can write, Jane's Lemonade Stand or whatever you want to call it. You have to put it in a particular business category. They give you a whole book that determines what business category you are, and that one would probably be food service or something to that effect. But as far as taxation goes, there's really no difference between that and the person who's actually owning it. Liability, on the other hand, one problem with the sole proprietorship is the proprietor is fully liable for all corporate debts, which, makes sense. It makes common sense, really. If somebody chokes on the lemonade or somebody slips on a little bit of an ice cube that fell down from the lemonade stand and sues me or sues my lemonade stand, well, I am going to be personally 100% liable for whatever debts incurred by the company. If I went and signed a contract to a sugar distributor to deliver 100 pounds of sugar to my lemonade stand, well, again, that's me. For the same reason, there is no legal distinction between the owner and the business. The person is simply running a sole proprietorship. As we'll see later on, and the other business forms have some advantage when it comes to liability and have some differences when it comes to taxation. The advantages of a sole proprietorship are simple. You have total control and simplicity of formation. It doesn't cost a dime to form. You just open your doors and that's that. You have total control over it. You don't have to worry about going to a board of directors or going to a managing partner or anything else. You just start operating. What are some of the disadvantages of sole proprietorship? In other words, why do people become more complex and more expensive forms of business, like the partnerships or corporations or other things we are going to discuss? Well, number one, difficulty in raising capital. If you want to raise money to run your lemonade stand. Now, lemonade stand probably is not going to cost that much to run. Maybe you need a little bit of cardboard to put up your stand and, some lemons and some water and some sugar and some ice cubes. Doesn't cost that much to actually run. But if you have something more complicated, like you want to hire a couple of developers to work for a year to build an iPhone app, it's going to cost you a couple of $100,000 to pay salaries to build or to rent office space or whatever it is. You really have to come up with that money on your own. If you don't have that kind of money in your pocket, you can go to the bank and get a loan, but you can go get a business loan. But again, there's no real special shortcut. You got to raise the money somehow. We'll see with corporations, you can sell stock, you can sell parts of the business, but raising capital is not that easy when it comes to a sole proprietorship. You've also got unlimited liability for the owner and the business debts. As I said before, if there's a problem and somebody gets sued or there's some level of liability, the owner will be 100% liable, and there is very low liquidity in the ownership of the business. If you want to sell the business, just like any other business, you can sell it, but it's not that easy to chop up the business and sell individual shares and get investors. If you do want to do those things, which many sole proprietorships do eventually want to do, sell shares of the business, you're probably going to have to then turn it into some other form of business, like a partnership or an LLC or a corporation even. And of course, by the way, you can switch back and forth. If you have a sole proprietorship, you can turn that into a corporation by just forming a corporation. You're not locked into any one of these particular business forms. So many businesses start as a sole proprietorship, and then after a while they're formed into partnerships when other people come on, and then maybe LLCs, and then eventually they become corporations. That's fine. Let's take a look at some of the other slides. Again, some of this is a little bit of repetition. Some advantages of sole proprietorship we discussed. Low cost of formation. The owners can make all the management decisions. You can have employees. That's fine. When you're talking about tax rules, of course, you may have special tax rules as an employer. You may have to send your employees W-2s. You may have to send independent contractors 1099s, and all that other good stuff that's a little bit beyond the scope of this course. But that is certainly something you do have to be concerned about. But in terms of the profits, it just goes on your personal 1040. Sole proprietorship owns the whole business, has the right to receive all the profits. You can sell the business if you like without anybody's permission. I mentioned before it's not that easy to sell shares of it, but if you want to sell the whole business, all you have to do is make a contract and have somebody agree to buy it, and you agree to sell it. What are the disadvantages? Well, again, as we discussed before, access to capital is limited to the personal funds plus whatever loan that you can contain. You're legally responsible for the business and personally liable for any tort that is committed. Creation of a sole proprietorship is simple. There are no formalities. There are no federal or state government approval to form a sole proprietorship. But again, depending on the nature of the business, you may require some sort of a license to do business, depending on what it is you're actually doing. The liability, which we briefly touched on before, and we'll get into a little bit more now, the liability of a business includes, number one, the risk of loss of the business. If the business doesn't do well and the business fails, well, that's 100% your problem. It's nobody else's problem, as it would be in the corporation. The proprietor has unlimited personal liability. If somebody wants to sue the business, you and you alone, the proprietor alone, is going to be completely liable. And the creditors can recover claims against the business from the sole proprietor's personal assets. If they sue the sole proprietor, well, then the sole proprietor's house and other assets may be in jeopardy. And as you can see from this little diagram over here, the sole proprietor is really the entire business. The sole proprietor will owe debts or obligations to a third party with whom they do business. And if the third party owes the sole proprietorship money, again, the sole proprietor has the personal liability, is the person who would bring an action, or the person who is owed to the same extent. In other words, the sole proprietor, really the point of the entire first lesson is that the sole proprietor is the entire thing, is the entire business, start to finish.